it's Christian from Serene Education with the 4 Majors Notes update for the 24th of June 2013. Morning. Hope you had a fantastic weekend with family and friends. Today we're going to focus on the 4 majors, starting with the euro against US dollar, using our FX8 template. That's indicated at the bottom right corner. Let's have a look and see what happened on Friday. Well, what did we saw on Friday? We saw a very negative candle, moving back euro, really falling after this bearish engulfing candle that we saw recently. I think it was Wednesday, in fact. Seeing a lot of falling, moving to the downside through to Friday, and Friday heading into the 38.2 here, the monthly major Fibonacci retracement area here. Also, closing out at 38.2 on the weekly. You can see these two lines of 38 monthly and 38 weekly very close together, concluding a very strong support or resistance depending on which side price was. You can quite clearly see that last night on the Asian start, the institution moving average and the 50. So what we want to see now, if this is to be genuine negativity, is we'd like to see the 38.2 ideally on our weeklies becoming the intraday resistance level. As long as price maintains below the 38.2 on the monthly, this red line, then ultimately we're still looking for negativity. Before it was prior resistance here, quite clearly we were trading above it as support. Now we're trading below it again, so still negative. Very mixed signals on our chart, as you can quite clearly see. And R squared complementing some of the negativity we're seeing on the 4 hour, but getting into the smaller time frames, that R squared not really falling in place. We have the moving averages above price acting as resistance. However, a lot of these indicators over here are telling us we should be looking for positive sentiment. We are seeing consolidation, and that probably leads into what we're seeing at the moment now. There's hesitation because on the 4 hour time frame, as I move into my 4 hour time frame, you can see that the institution moving average is still there, still hindering price from falling any further, and they'll be aware of that. So ideally, to see any further negativity for this particular pair, we would need to see a nice 4 hour candle close. So as it stands at the moment now, what you could do is you could draw a horizontal line on your 4 hour chart, put in your trigger alerts, wait for the 4 hour candle to close, and then that would indicate for the remainder of this week we should be looking for further sentiment to the downside. It's imperative we get below the 38 here, break below with sentiment, because we are trading in that consolidated band between the 38.2 and the long term and the major short term one. So it's imperative that we get that confirmation signal closing lower, and then we can look towards quite comfortably towards this 23.6 mark here, which is roughly 100 pips away from that target. Get below that, then we can see further negativity towards the 23.6 on our monthly Fib retracement, which also coincides with the 0 line. So 127.35 would be our next target, second target, and that's a good comfortable 232 pips away, roughly to that area. So there's a lot of negativity to the downside. So here, a lot of the last 8 hours have been very indecisive. I want to see a decision candle. So if it's bullish engulfing and back above 38.2, wait for the confirmed consolidation above there, and then we head up to these higher points it's just come from. Bearish engulfing candle closed low on a 4 hour. Look to target the downside with those targets I just mentioned in mind. Sterling, here again. Okay, very strong negative trend to the downside, as you can quite clearly see. I drew that in last week. You can see over here, though, on Sterling, a more confirmed selling. You can see here the R squared on those time frames, indicating this sentiment that we're seeing negative intraday is very much true. What it's done is it's seen we were trading above the institution moving average for the first time in as many months. However, failed to actually, when we saw the pullback, failed to find the support candle to move higher. We actually saw a bearish engulfing candle closed lower, and with that movement, we saw price only pulling back to probably about 23.6% of the Fib, and then we saw price selling further into the break of 50, back into the 38.2, and now trading at the underside of the 38.2 in the weekly. So now, effectively, the 23.6 on our monthly time frames would be our ultimate target to the downside, and we're looking at roughly 56 pips to that area. Get below that long-term monthly Fib retracement area is a major support and resistance level that goes back to 2010, in fact. So getting below that would be a very negative outlook, and we could target these next areas here at 15.18 and ultimately back down toward this major consolidation here at roughly around the 15.0219 mark. Ultimately falling down to 14.85, which is the long-term monthly long-term Fib retracement consolidation here that we saw back when price was testing those 2010 lows. So here intraday, if we go to a 4 hour time frame, let's have a look. The institution here again is in the way. So ideally, want to see a nice bearish engulfing candle on the 4 hour. Want to see the sentiment coming through. We want to see that genuine sentiment, and then we'll trade the outcome. And because we're trading quite close into the 23.6 on a monthly, it's far better just to rather stand aside, wait for the defined confirmation candle to give us an indication that price is still looking to to fall lower. Once we get that, we're going to see everything going negative as it stands now, especially on a longer term, and then we could target those particular areas to the downside. US dollar Swiss franc. US dollar falling quite aggressively recently after the announcement from the Fed about potential tapering of the QE3 plan they've had in place since last year, where they've been spending on average 85 billion per week, and that's where we've seen this major fall, and in doing so pulling back towards major support and resistance lines, in particular trading below the current consolidation here, however not really taking the momentum and moving lower, finding support over a week, and then sure enough we had this bullish engulfing candle, bit of positiveness for the US dollar against the Swiss franc. In doing so, moving above the fib retracement area here, pulling back, finding support, and then the continuation we saw on Friday. Now heading above the institution into this very strong fib retracement area here, which is our monthly. Got to get above that, guys, to see further long-term sentiment to the upside. Notice over here, very speckled, very indecisive long-term sentiment here. It is negative, however, you can see a lot of positiveness intraday, and that obviously confirms what we're seeing recently with this positive consolidation. We would need to see the 50% line being breached. We are trading quite close into that area here. It'll be far too risky to trade into this area because you're putting a lot more risk on the table. There is obviously 36 pips to that area, but you're carrying at least double that in terms of risk, so it's not too good. Rather wait for a nice confirmed break above the 50% February retracement here, and then trade upside towards these current highs we saw the US dollar coming from. The other scenario would be to see a bearish engulfing candle around this area here, which would concur that we are seeing a genuine resistance area, because you can see we failed here before, and then we could look to trade back towards that the 23.38.6 mark to the downside here, which is a comfortable, let's have a make here, 100 pips or so to that level. So be wary here. Don't want to be, you can see the last night's candle very indecisive. We are seeing a spinning top now on the daily. Rather wait for a confirmed break above the 50% Fib retracement here in order to see further upside, or wait for a bearish engulfing candle to confirm this is genuine resistance area, and then we could trade to the downside. US dollar Japanese yen, the daily. Here again, a lot of positiveness just recently after the US dollar found support near term on the 38.2 after breaking the 50% Fib retracement. These red lines, these dark red lines, are my monthly fibs, and you can see how price has actually reacted quite positively with these lines. Prior resistance, breakout, and then the continuation failed to hang on to those highs. We had some tweezer tops, bearish engulfing candles, price reverted to the downside after the Fed announcement about their tapering on the QE3 plan. Subsequently, a lot of selling because of that. However, near term, finding a bit of support, and we've seen upside sentiment since. So the past week in particular, seeing a lot of buying sentiment coming through, getting above the 23.6 on our weekly, and doing so, heading higher. Our next target would be the 50 period moving average, or 50% fib line. RMO is still below the 0 line, but the MACD is telling us we should be looking for upside buy. The indicator box over here is primarily blue. The most important one being the RMO, which is trend indicator, and the institution moving average, which is our 200 period. If these two are working together, then ultimately the sentiment is looking one of upside. And you can see, however, intraday our R squared is which we want to be on our favor, because it's going to tell us it's genuine sentiment, whether it be bullish or bearish. You can see that the 15-30 minute just not with us at the moment, and hence the reason why we are in this hesitation. On our 4 hour, you can see the institution and the 50% Fib retracement are pretty much away above, so that's going to be a very strong resistance, and there's 120 odd pips to that level though, and price is now trading above the current high that we saw recently last week. So if you can spend a bit of time here, get a bullish engulfing candle on the 4 hour, head towards these areas here, but just be aware you'll be trading with a lot of risk, because you're trading into a major Fib retracement as well as the institution moving average. So very, very important. Rather stand aside, get above 100. Once we're above the 100, then look to target the upside further. Okay, so that's the 4 majors, nice and short and sweet this morning, using the FX8 Ultimate template. Please back it up with sound money management rules. If you are using this template, follow the rules in particular. Very important. Keep it simple, guys. Look at major support and resistance levels on your weeklies, your monthlies, to give you an indication where price is trading relative to those, because it's if you're trading into a major resistance level, there's no point in buying into it. Here, too close to risk all this. Rather wait for a confirmed break above, then trade confidently without less speculation and more free trading to the upside. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.